Good morning. This is George Kachuk, RCM Wealth Advisors, reporting to you from a CME Group trading floor in Chicago. Well, let's talk about the equity markets. The tale of two market continues. What I'm talking about is the Dow, again, closed at a new high on Friday, hitting a new high today, and it's joined by the Dow Transports, also hitting a new high, pretty much confirming the Dow theory of a market in an uptrend. S&P 500 flirting with its all-time highs as well. NYSE Composite Index doing the same thing. NYSE Advanced Decline Line hitting new highs, so what's not to like? Well, we still have one problem, is the NASDAQ still looking for a bottom. It did bottom April 15th, at least temporary, but we haven't seen much conviction of people buying NASDAQ stocks. So we're going to see if NASDAQ can stage a follow-through day, possibly today. It's up about 1.5% this morning, up at about 60 points. We'll see the volume come in and hold, and that will really confirm that this market's set to go. So we need to see some improvement in NASDAQ. Also, the Russell 2000, the small cap stock index, is still down as well. So that's kind of a little bit unsettling. So when I talk about divergence and a tale of two markets, that's what I'm talking about. The Dow and the S&P performing very well, and the NASDAQ and the small cap Russell 2000 not doing very well at all. So what can an investor do in this situation? Well, I think there is enough evidence that you can continue to make some plays. Last week we talked about buying strong, fundamentally sound stocks like Gilead Sciences. We're accumulating that stock off the bottom. But one of the other things you can also do is use relative strength. Now, relative strength refers to stocks that are outperforming the S&P 500. So if you look at a stock like Avago Technologies, the symbol is AVGO. Last week it broke through the $66 area. Now, the big important thing technically is its relative strength line was hitting a new high. It means it's outperforming the S&P 500. And now it has a great fundamental story, meaning its earnings have accelerated for the last 3 quarters, going from positive 3%, plus 16%, plus 29%. Similar situation happened in its revenues. Analysts now are revising their estimates. Basically, they're looking for 2014 at about $3.45. That's been pretty much revised to over $4. And for 2015, they were looking for about $3.89 per share, and now that's been raised over this last week to $4.92. That's a huge jump. Now, mutual funds have been accumulating this company over the last 5 quarters. Profit margins have been over 25%. And recently, they have bought LSI Corporation. And basically, that's going to give it's some exposure into the software and data storage network. Avago, AVGO, is a chip maker. Their radio frequency chips are on Apple phones and Samsung phones. So now with the purchase of LSI, they're expanding their horizons. Now, how would you play it? Well, it's viable anywhere between the $66 up to the $69 area. You don't want to chase it too far. This morning it's trading 68 and change, so it's a good place to pick it up. Now, if the stock drops below 63, you might want to say, hey, this trade's not going to work. That's why I always tell you, let price and volume be your guide. But here's a low-risk entry of a stock that just broke out, showing high relative strength. It's worth a shot. As always, have a great trading week. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.